over IRS Form 8974, Qualified Small Business Payroll Tax Credit for Increasing Research Activities. This is a tax form that is going to be completed primarily by small businesses, qualified small businesses who invest in research and development activities and have claimed a tax credit on IRS Form 6765, credit for increasing research activities, and have elected to use part of that tax credit to offset their payroll tax costs. So there's a lot that goes into this form. Even though it's one page, we're going to break down a couple of key concepts for you. So IRS Form 6765 is the tax credit that it's available to businesses for increasing research activities. And generally, that's a tax credit that they can claim against their income tax. However, qualified small business owners have the option to use part of that tax credit up to $250,000 for tax years through 2022. Beginning in tax year 2023, that's been bumped up to $500,000. Now, to be a qualified small business, you have to have less than $5 million in revenue in the given tax year, and you have to have no more than 5 tax years where you're claiming the research credit. And then you have to file IRS Form 6765, and you have to elect specifically for part of your tax credit to be used to offset your payroll tax credit. When you make that election, the amount that you elect to choose as a payroll tax credit is going to be the amount that informs your calculations on this form here. So with that said, you can't really file Form 8974 unless you've filed Form 6765 and made that election, and you're a qualified small business with payroll tax costs. And on top of that, then you can only reduce your payroll tax costs down to the point where your liability is zero. You can carry forward tax credit, but what you can't do is make a negative tax liability. So part of the small business owner's accountant's job is kind of making sure that you're electing enough to offset your payroll, but not so much that you have to go back and do a bunch of rework to reapply it and file an amended return because you didn't get it correctly. So let's go through, starting at the top of the tax form. As you can see, we've already pre-filled some of this information. So at the very top, you're going to put your employer identification number and the company name. So in this case, Acme Enterprises, EIN, and then you get to choose which payroll or employment tax return that you're using to offset. So I chose the Form 944, which is the annual employer payroll tax return. The other two, either 941 series or the 943 series, those are quarterly returns. So I put this for calendar year 2022, and I'll explain in just a moment. However, if you picked one of the quarterly returns, you would then have to check the appropriate box. Now, if you've elected, so walking through this example, I'll kind of illustrate why you can't claim this tax credit in the current either quarter or year. So at the time of this recording, it's 2023. One of the IRS stipulations is that you can apply this tax credit to previous periods that have already been completed, but you can't take the deduction or the credit in the current period. So since we are currently in tax year 2023, we can't apply this credit that was claimed on Form 6765 for the 2022 tax year. We can't claim it for 2023 taxes. We have to be able to go back and apply it to the payroll taxes from the prior years. And so you can put up to 5 tax years worth of information in here, and this is pretty simple. We, all of these kind of kept them the same, but 2019 tax year, 2020 tax year, 2021 tax year. For purposes of this is an S corporation, and that's the tax return that we filed. And they were all filed on the same date, March 15th of 2020, 2021, and 2022. And it's the exact same company filing all 3 years. Miraculously, they happen to have the exact same amount that they decided to apply against the payroll tax, so $5,000 each year. We put in that they had taken $1,000 in a previous period, so there's $4,000 left. Now, obviously, your situation is probably not going to be this plain Jane or straightforward. It's going to be a little bit different, but for mechanical purposes, this is kind of how you would complete this form. And again, your tax software would probably prompt you to make sure that you're informing the correct calculations. This is a manual data entry at this point, so if you're using tax software, I would imagine that you would have calculations that bring up flags if the numbers that you're using conflict with numbers elsewhere in your tax return. So in line 6, you'll simply add the totals of all 3 columns G, or all of the entire column G, and we got $12,000. So this is the amount of tax credit that you can use in this period to offset the payroll costs, right? So payroll costs, generally we're talking about the employer side of the Social Security tax and the employer side of the Medicare tax. So Social Security tax is 6.2% of an employee's wages or tip income up to a certain threshold. That threshold changes every year. That's on the employer side and on the employee side. With Medicare tax, it's 1.45% of an employee's wages or tip income with no ceiling. So if an employee has $1 million of Medicare wages, then they're paying 1.45% all the way up. And so are you as the employer. So now we've got $12,000 of a credit that we can use. Now we're going to go through to kind of make sure we know how to offset those payroll costs. So again, this is for tax year 2022 because we can't apply this to the current tax year if we haven't filed the current tax year's tax return. If you were applying this to a quarterly and we were in, say, July of 2023, then you could use this to cover either the first quarter, January, February, March, or the second quarter, April, May, and June, but you would not be able to apply it to the third quarter until you file in October, November, or December, right? So that's kind of how this would work. Again, for academic purposes, we're just kind of moving through. So most likely, if you're completing this, unless you only file annual payroll tax returns, you would probably be using the Form 941 because you want to kind of keep on top of your payroll tax, and make sure that you're taking that credit and keeping track of it. It's a little bit more easier to stay on top of it if you're doing it on a quarterly basis rather than waiting for the entire year and then throwing all of this onto your accountant or CFO. So in line 7, you're going to carry down the part. So in part 2, we're going to determine the credit that we can use this period and then see what we need to carry forward, right? So in part 1, we're reporting about the tax return. In part 2, we're actually going to see how much of this credit we can use. So in line 7, we're simply carrying down this amount from line 6, column G, $12,000. We're going to enter the amount from either Form 941, 943, or 944, whichever of those, depending on the return. This is the total amount of Social Security tax on wage income for your employees. So I put in a placeholder of $5,000. This isn't going to make sense if you actually tried to calculate a percentage of employee wages, that's just a number I came up with. So $5,000 is for the purpose of this exercise, this illustration, is the amount of total Social Security tax on wage income. In line 9, this is the total Social Security tax on tip income. So, this is an R&D company. We don't have a whole lot of tip income for our employees, so I put 0. And then we simply added those amounts. $5,000 happens to be the total. Now in line 11, we're going to multiply that by 50%, because if that was the total amount, you got to remember that the employee share is 50%. We're not going to be able to take a tax credit off of the employee's share, because it's not our money that we're paying their share of. That's coming out of their wages. So we have to multiply that by 50%, and that gives us $2,500. Now, if you're a third-party payer of sick pay, then there are special instructions. If you received a notice and demand letter from the IRS, there are special instructions that apply as well. So a third-party payer of sick pay that files Form 944, there are certain substitutions you would need to make. So the substitution for Form 941, line 8, you would substitute that with 944, line 6. And then 941, line 5A, column 2, you would substitute that with Form 944, line 4A. So that's if you're a third-party payer of sick pay. Now, as kind of an overview, you can only take up to $250,000 against the employer's share of Social Security tax on wages paid to employees. So that's going to be a limitation that we'll see later on. If you received a demand letter, then you have to report the amount for the employer's share of Social Security tax. The demand letter usually includes an attachment that shows the employer's share of Social Security tax. You must add that amount to the amount that you've already reported on line 11. So if you have a demand letter, you have to add that amount to this $2,500. So in line 12, you enter the smaller of either line 7 or line 11. So line 11 is mathematically the amount of Social Security tax that that's the employer's share. If this was, say, $12,500, then we would have to compare that to the amount of actual credit we have to work with. In this case, $12,000, we would have to take the smaller of them and say, all right, we're going to take the $12,000. As it turns out, $2,500 is the smaller number. We're going to take this. And in no cases can either of these numbers exceed $250,000. So that's the limit that's been built into that. So there are special instructions if you file Form 943 or 944. If line 12 is less than line 7, then we're going to go through with the rest of this. Basically, if there's money left over, then we have to complete this. If for some reason we use the entire amount from line 7 and line 12, then we wouldn't really have anything to complete for lines 13 through 16, and then the total credit would be the same amount that we put in line 12. So we're going to just kind of proceed since we still have some credit remaining, and now we're going to apply this against the employer's share of Medicare tax. So subtracting line 12 from line 7 gives us $9,500. That's in line 13. Now, these lines that are referenced in these various returns, this is the Medicare portion of the employment tax. So for illustrative purposes, I throw in $1,000 obviously the math is going to be different. And then we multiply that by 50%. So again, we're only taking the employer's share of the Medicare tax. We can't take the tax credit and apply it to the employee's share. And again, special instructions if you're a third-party payer of sick pay. If you received a notice in demand, you have to follow those instructions if they apply to your situation. So in this case, they don't. So we're just going to carry over the smaller of either this number or this number. We've got $500. We add this to the line 12 number, and that gives us the total credit. So this would be the amount that you also enter on either Form 941, line 11A, Form 943, line 12A, or Form 944, line 8A. That's all we have for this tax form. If you want to know more detail, we've written a step-by-step article to serve as a guide for completing this form. You can find it on our website. Simply go to teachmepersonalfinance.com, type in IRS Form 8974, and this form should appear. This article should appear. If you like our articles, please subscribe to our newsletter. If you like our videos, please subscribe to our YouTube channel. And if you have any questions, please post them in the comment section. Thank you very much and have a great day.